This is the trade that I'm making money with right now. Although we've had some pretty good days, volatility in general has been rather light. When the stock market is going up, volatility tends to come down. So when volatility is this low, I have to be very particular about which trades I do overnight, because we need movement in the market for us to make money in options overnight swing trading. There are a couple SPY-T trades that I really like to use, especially in smaller accounts, say under $1,000 or $2,000. And the reason is I only have to buy 2 options versus, say, a SPY-TA or a SPY-Tq, where I have to buy 2 or 3 options. These trades, I only have to buy 2 options, a call and a put in ratio. The ratio that you use depends on how aggressive you want to be in your trade. Now, I like the SPY-Tb trade, especially when volatility is up, especially over 20, maybe down to IV 18, but not much lower than that. It has nice protection and you can get some good gains if the market moves the way it should during high volatility times. During lower volatility times, it is tempting to just go directional. However, when you go directional, you have that risk of losing 50 or 75% of your trade overnight. So I still like to have a SPY-T trade in place, although I like to be more aggressive because then I need less of a move to start making money. And that's when I start to look at the SPY-Tbq trade. As you can see in the SPY-Tb chart, if your indicator said up, you would buy a call at the money and then a put at half price. However, for a SPY-Tbq trade, you would buy that call at the money, but a put at a quarter of the price. I'll tell you in a few moments the ETF that I've been using, and it's not SPY, and I haven't been using the SPY-Tb trade or the SPY-Tq trade. I've actually been very comfortable with a trade that's in between the two. This trade is called the SPY-Tbt trade, and if your indicator said up, you would buy the call at the money and your put 1/3 the price. This trade is not as aggressive as the SPY-Tbq trade, and you don't need as much volatility that you do with the traditional SPY-Tb trade. It's a nice point in between. And I'm finding that when the market is going my way, the indicator was right, the mood of the market didn't change overnight, I'm making some really nice gains. However, if the mood of the market changes and the market goes the opposite direction of my indicator, I'm not losing as much. The gains are far outpacing the losses, which means at the end of the week and at the end of the month, I'm well ahead. Although the indicators and algorithms over at SPY-Tomorrow.com are based off of SPY, I really haven't been trading SPY very much. Not even the QQQ, just because volatility has been down so much. I've been leaning a lot more on IWM. The IWM, which represents the Russell 2000, can kind of be a wild card because unlike the SPY and QQQ, it's a totally different sector of stocks. It's small and mid-cap stocks, whereas the SPY and the QQQ have very similar highly weighted stocks within them. Names that you know, such as Apple and Google, Microsoft and Tesla. So they tend to run in the same direction. Not always, but more so than not. And when the market is up, the IWM will often be up too, but not all the time. So this is a wild card that we have to contend with. Although the IWM isn't always in sync with the SPY and QQQ markets, it makes up for it in its volatility. Meaning when it goes, it often goes big. It moves 1%, 2%, and 3%, which means our gains are outsized. And if we're using the SPY-Tbt trade, if it goes the opposite direction, away from our indicator, we minimize our losses. So outsized gains, minimize losses, that's a winning combination. At the end of the trading day, I go to SPY-Tomorrow.com to see if the indicator says up or down. And then I'll check the confidence indicators. If it's a higher confidence level, well then I may be a little more aggressive in my trade, maybe a higher position size. If it's a lower confidence number, well, maybe I'll have a smaller position size or not trade at all. If I'm going to trade, let's say the indicator says up, well, then I will buy IWM. I'll buy a call with an expiration of maybe 4 to 7 days out right at the money. And then I'll buy a put 1/3 the price. Again, that's the SPY-Tbt trade. And then I'll wait overnight and sell it in the morning, and I'll see you in the next video.